Good morning, everybody. Thanks for stopping in for another one of our coffee and flood chats. Today, it's going to be about excess flood and is it worth it? Ultimately, I have a quick agenda. If you don't mind clicking the next screen. I guess first, I am the presenter, Diana Duke-Cody. I work here at New England Excess. I have been doing all flood all the time, every day for about almost 8 years, almost 9 years. Teach classes to anyone willing to listen, ultimately to kind of just keep spreading the exposure of flood. It's been one of those sleepy killers, kind of, and we'll get into that a little bit into the discussion coming forward. So, hello.
Then I guess I'll take it here. I am your co-presenter. I don't know too much about access flood. I know more about the NFIP, but my name is Dawn Halkyard. I am the marketing representative with New England Access Exchange, and I will be here to help assist with general questions and just keeping the flow going, helping Diana out.
Thank you for being my IT master. That is not my department.
Yeah.
So today's agenda, we'll go over some quick excess flood key points. We'll then talk about some private flood excess products. We'll then discuss what does excess flood do? When do I offer excess flood? You, the agent, or those in the professional field? And then flood, are you actually talking about flood? Let's see if you are. And then we'll have the open floor for any flood questions. Also, feel free to interrupt at any time. Please put a question in the comment box, unmute yourself, spit it out, say whatever you want. I am here and I work very well under pressure. And there's so much knowledge in here. Sometimes you just have to pluck the right Jeopardy card, and I'm happy to answer. So, all right, let's get into it. Excess flood. Firstly, what is excess flood? Excess flood is a private flood insurance product that basically extends beyond your primary flood policy. That could be a private flood or an NFIP flood that has a certain amount of limits. So when it's NFIP, it's their max limits. When it's private, it might just be a product that you were able to get at one point that has a great rate, but maybe isn't enough of a limit. That can still be an underlying. It's not limited to being just this 250 over primary or 500 over commercial. But for NFIP purposes, that's where you typically see the attachment point of an excess. Another key point about excess flood, there is no separate deductible. The deductible is your underlying policy limits. I typically hear people ask or kind of question about this. What's the deductible? Well, on an excess policy, it is that your max underlying policy has done its job and or paid its limits. Another key point about excess flood, just like in property and casualty, that excess portion of most risk is actually often cheaper than the primary layer. People want to maybe escape, and by people I mean carriers and risk people that are taking on flood. They would rather be on that second layer than that primary layer because most often claims eat that first limit, that first primary policy right away, or that is your first exposure. So, in doing that or recognizing that, they typically charge a little bit less on the excess portion of your policy up to whatever your limits are. Then there's another policy which basically is a primary and an excess in one policy, and in my world or our jargon we call that a primary to full value policy, which basically has the excess portion built right into it, and you cannot get that in NFIP, but it is a private flood policy. Basically it means one policy for your full limits. An example of that might be you have $1 million home and you'd like to have coverage for that full limit of $1 million. There is a private policy that can do just that. It's not separated in primary and excess. Next, please. So, some of the products that exist out there, and I apologize that they're so wordy because I feel like that's another thing that sometimes either scares people or sets them a little aback when it comes to flood products because they're just extra wordy for, I think, no real reason. But here are some of those types of products. So, an aggregate limit excess flood is basically a private flood product that gives you a single aggregate per event for excess flood limits over a full schedule of policies. So, let's say you have 5 buildings and you have an extra, I don't know, 1 million exposure on each. You may have decided to say, oh, I'm only worried about 3 million of that excess instead of the 5 that might be there. So you can actually get a policy that says 3 million aggregate limit for any claim. So long as the claims total under that 3 million, that's where your policy is going to come in. Then there is a per location excess flood schedule. So you have a private flood product that provides a specific limit per location in excess of its underlying in a flood schedule. So building A has a primary at 250, but it needed 250 more. So this would schedule it out as building one, location one, 250 excess of its primary. And then building two could have the same amount. Ultimately, each building can be up to its full value in the difference for the excess. Then a third type is the specified limit excess flood. It's a product that has specific limits per building, individually or in a schedule. So let's say your biggest exposure in excess for a schedule of 10 policies is you feel like you might be 50K short at each building should a loss actually occur. You can get just 50 on each building excess. So this is a way to put it into a single schedule. All right. Then, not to muddy the waters, but there's also some other products that kind of act as excess or further fill in gaps. So, some of those additional products are parametric. Parametric is a sensor based type risk or product, I guess. So, let's say you had a primary flood policy, but you were worried it could not cover everything, or you have things that maybe your standard flood wouldn't. So some of the examples I have or see all the time are golf courses. They have golf greens. A regular flood policy doesn't cover that. Sure, they can get a regular policy for their building, but what about the greens? If they fill up with water, they're not working, they have a business income exposure, um, they have to fix it and or drain it. So parametric, what they do is it's sensor based. So if you get 2 feet of water on your golf course, and this sensor is triggered, you just get a payout. There is no deductible. There isn't much of a claims review beyond did the sensor go off? And that kind of fills that gap. Another type is the difference in conditions policy. Typically, you see this for risks that have to have flood insurance because a lender is requiring, but it's not necessarily in a place where people expect it to flood. So it's like the you have to have it, you don't really need it. How's the cheapest way to get you the requirements that you need? And difference in conditions means they basically take a general liability policy, delete everything they don't like, and then just add the few things they do like for flood. So again, we have carriers for both of these things. There's always new products kind of coming out too to address these unique things. Like I said in here, car dealership lots, all the cars in the lots, if they get sucked into the river after a flood, it's not coming from your standard primary flood policy. It does have to be a special product. And that's again where these kind of extra products come in. So even though they're not excess, they kind of are because it's beyond above and beyond what your primary can cover. Similar with statues. I recently did a private bridge. Uh, if this was gone, they couldn't get to their home. So it was a very important thing to get covered for them. And they needed it. And they had a claim was paid, bridge is rebuilt already. So keep that in mind. There's so many different new products out there. I try my best to be up to snuff on them. I try to have a carrier player in every one just so we can make sure that we're offering all the things that are needed. But those are some of the biggies, the biggies. Next slide, please. So what does it actually do? Basically, excess flood provides coverage when exposure exists beyond that primary policy. So I thought the easiest way to kind of express this or share it without, driving people crazy with all my flood language, is to just give an example. So Gwen bought a home with a replacement cost of 680,000. Sadly, Gwen's home was severely damaged in a storm, and it resulted in about 490,000 in damages. The good news is that Gwen had two flood policies. She had a primary policy, NFIP, and an excess that answered for the claims in this situation. These are the two policies that she had. She had a primary flood policy with NFIP for 250,000 on the building with a $5,000 deductible. And she also had an excess private flood policy with limits of 400,000 excess on the building with that 250K deductible. Like I said, that's the underlying policy. Not to be scared. Next, please. So claimants have come in, everything's met, documents, evaluations, appraisals, got a props to the claims people. I'm not a claims person, so in my world, in this example, everything is perfect. There's no hiccups. Not saying that there ever isn't, But in my world, in this case, there aren't any. Everything was met and everyone agreed. So that primary flood policy paid its limits, which was 245,000, which is the total less the deductible. Then the excess flood policy comes in and says you have 400,000 in building coverage, but the excess portion of the claim is actually only 240. So your excess policy pays that 240. As soon as your primary flood policy has done its job, that's when your excess policy can do its job. It does its own investigation, its own appraisals, its own whatnot to kind of come in where they meet together to make sure that you're getting the maximum back between the two policies. So, what did it do in this case? It basically made Gwen's life a little easier. She had about $240,000 more that she needed to rebuild and repair her home, and she had it. So, without that, she'd be a little shorthanded on some cash and some repairs. So, that's what it does. It basically fully encompasses your whole risk should it exist and helps kind of close that coverage gap should a claim occur. Next slide, please. So, as agents and professionals, like when should we be offering this? Like when should we be talking excess flood? So, I will always say that there's never a time. If you're selling anything that involves property or something of value, period, you should be including a flood policy, of course. But for excess, when you are offering that primary flood policy and kind of evaluating their coverage needs, it's at that time you're going to know, should they have an excess? Should I be looking for a private policy that does everything? Do they have a great NFIP rate, but now the current values of homes have gone up so much that it really wouldn't support them appropriately if anything should happen. Another time is anytime the valued interest in a property is not met with the primary flood policy. So, like with my example with Gwen, her house was worth 680,000, and while 250,000 is a lot of coverage, it's not enough. If her house was completely washed away, she'd have a significant shortfall, and there's no other place to get it. So that's where your excess flood would come in. And then whenever you're providing a property policy, again, a flood policy should really tag along. A risk exposure is basically associated with anything having value to lose. So no one is immune to flood. So we can all lose something to flood. So those are some key times or the easiest times that I've seen in my work here and dealing with flood in some of these classes. If you're already talking about it, no better time than to say, do you want that little more to give you comfort? That's where access comes in. Next slide, please. So I probably said this, I don't know, hundreds and hundreds of times in my flood life here and maybe even before. Floods don't care about the zone you're in or whether your lender required you to get coverage or not. They don't care. Flooding occurs in all zones and all unmapped areas across the US and globally every single day, somewhere, at some point, someone's flooding. The sources of flooding, certainly they vary, depend on your location, but just because you're at the top of the mountain doesn't mean you're immune. North Carolina, victims of Harvey, they can all tell you that, oh, I thought I was safe until I wasn't, because you're really not. They don't, floods don't care if your lender says you have to have that coverage or you don't. They don't care. It doesn't even think about it. It just comes, doesn't care. Then the only real way to mitigate your flood exposure is to either absorb it, take some action to prevent it from happening at your location, or to get insurance. And I can't say, insurance is the easiest because it's the most expensive, but I can say doing nothing means nothing, right? There is no gain, there is no replace, there is no support. Just know that. And then ultimately, as the agent, none of us can guarantee that it'll never flood at their house. You can't. Even the best technology, all of the best data models, using hundreds of years of data, using all current data and all the cool tech that we have and their future predictions, still can't tell you where flooding will occur or how often it'll happen. After all of these years, it still can't do that. And we're still aiming for that, but we're not there yet. So, what you can always do then is prepare everyone by discussing flood exposures while you're already talking to them about their property risks. Ultimately, it's the sad truth. How much are they willing to lose if they didn't have coverage? Like, not meaning to be scary, but hey, I'm talking to you about flood. If you don't want it, no one's going to force you to get it. But are you willing to lose your $1 million house to a flood with no coverage? And sure, I know someone always says, there's no comments in today, but there is the emergency program that can help, right? And or then the FEMA National Emergency Program, when you don't have coverage, they can swoop in and help you out. It's not enough. It's typically a drop in the bucket and a slap in the face. And sometimes it also comes with, we're going to help you, but then you also can no longer live in your house and we have to buy it from you. So, which would you rather? A check to help you get you better off to where you want to either rebuild, do whatnot, get going, or hope that that will pay you enough? Like, those are scary situations to be in. And as someone who has been in that situation myself, I will always choose insurance now, whether it's a little amount or a lot. I'd rather have some insurance than none, period.
Yep.
Next
I was
slide,
able to add
please.
a little bit onto that too, just for a quick NFIP. Recent statistics show that the average payout for a family or individual in flood is $3,000. So it's not a lot when you're talking about FEMA assistance. It's just not going to help you. So definitely insurance is a key player.
Sure. So I mentioned this at the top. Are you talking about flood? In the world that we live in today, there shouldn't be anyone not talking about flood and or not taking it seriously. So just some quick statistics. In the US, they have experienced so many more flooding events just in the last, well, now I'm going to say 15 years, but this statistic is looking at just 2010 to 2019. More than 130 major flood disasters were declared. That's about 13 per year. And before that year, it was about 23 total were basically looked at in the first 10 years. So 2000 to 2010, only 23 occurred. But in the next 10, 130, that's significant, right? That's more than 5 times. And it's not getting better, unfortunately, it's getting worse. Now, if we take that and kind of make it even a little bit smaller, because sometimes statistics can help us look at it a little different, just in the last 25 years, average about 300 days out of the year, everyone is basically having flood somewhere. There's no state that's immune. Everywhere, all 50 in this District of Columbia, were all affected in 2021. That was just in 1 year. Every state got some. It's widespread. It's going to continue to happen. We are going to be forever vulnerable because we can't change what was done in the past. We can't. We have to ride it out. Every time it rains, our landscape changes. Every time an event like this occurs, it changes what we thought we knew. So, our flood protections that have been in place for, not to date myself even, more than 50 years are not doing what we need them to do now because they were built in a time before we knew what we knew now. So flood is happening every day, all the time, somewhere. And more likely, the people that you're connected with know this, or maybe it hasn't affected them personally, so they're a little hesitant, but we should all be talking flood all the time. It is basically like the drainer of all funds when it comes to an event like this. It's a cat coverage. Next slide, please. So, as I said, these are really high exposures, but out of all of that, only a few actually had flood insurance, right? So they just talked about how many people or how often it's happening. Ultimately, I couldn't get someone to nail down on a statistic. So between 3 and 15% of people, which 15 seems really high, actually had flood insurance. So stepping back from that, like, why is that happening? Well, the requirement mindset. That was the old way of thinking. Oh, my lender said I didn't need it. I don't have an exposure. My realtor said I'm not in a flood zone. I don't have an exposure. My insurance professional never mentioned it. Unfortunately, that is the way it used to be. Fortunately, it can't be that way anymore. Also, it was not ever really treated as a priority like the other insurance policies that we have, like your car, your home, your auto. And that all sounds great, except, in the 1970s, flood events were happening. I think back then it was between 5 and 9 every 10, 20 years, right? But as we just saw, 130 in 10 now. Like, it's coming. So the priority of it needs to shift because it's shifting for us. We don't have a choice but to catch up. And then another big reason why people often didn't buy, and currently some still don't, it hasn't happened to them, so they feel kind of immune. Doesn't matter what you see on TV anymore, people talking about it around you. It moreover is it's not me, so I feel good. Now, why must we change that? Well, as insurance professionals, it's our duty to help people get coverage for the risk exposures that they have. E&O claims are on the rise in many states for failing to talk flood exposures. So, one of the recent articles I was reading about was North Carolina. So many of the homes on the sides of mountains were never offered flood insurance. Now, most people say, well, they're up there, they should be okay. They weren't. So these people that were uninsured or underinsured definitely feel misled or misinformed about flood in general. And their risks after the significant event is when it really comes to head and it's too late. So we've got to change it and we've got to do it by talking about it now. Next slide, please. So we can change this. All of us can. Every person willing to talk about flood. As I said, I've met with lenders, I've met with realtors, I have met with agencies, I have met with students coming into insurance. I've met with insurance offices. I have gone to insurance conventions. Like, we all need to be talking about it. That's the only way it's going to change. But here are three kind of takeaways that I've learned or have seen a change in this trend or help change this trend. So you need to be talking the risk versus requirement. If it rains at their house, it can flood at their house. And if you, the agent, don't take flood seriously, why should they? Right? Now, another part of that is you need to be talking facts about the risk. Do they have an exposure? That is not saying, does the lender say they do? Does a flood zone say they do? No. If the location had, if this location flooded, would they lose property or need to repair damage? That's the only question. Now, we can't predict when it will flood or it won't. So it's not they won't flood. It's if this location did flood, would they have something to lose? Should I be offering that coverage? Yes, yes, you should. And then lastly, talking openly about flood risk in your collection of coverages. It's a catastrophic coverage and it's happening all the time. 300 plus days out of 365 means it's happening and it's happening all the time. And it has devastating costs. And ultimately, the markets have changed so much since the 1970s. There's no reason for someone not to be able to get some flood coverage instead of zero. Stepping outside of that, I'm a citizen. I pay taxes, and my taxes go to people that need help in that emergency program. Now, if they had flood insurance, would they need that program? Should I pay or would we keep paying more if they had flood insurance? No. So where would we rather that money go? Money going to an insurance company that does this for a living. It's literally what they do. Like, that's how they make their bread and butter. They take on these risks. Or we continue to pour money into an emergency response program for those that were not prepared. No, I feel like we need to make them prepared. Some coverage is better than no coverage any day of the week. All right, next slide. Now I'm ready. Any questions?
Thank you for watching our coffee and access flood presentation. If you have any additional questions, please feel free to reach out and leave your comments below. If you're looking for more information on how your needs can align with our underwriting capabilities or want to know more about our overall markets, please schedule a virtual meeting with one of our marketing team members today or give us a call. You can click the link below to schedule a meeting at your convenience. Customer service is always our top priority here at NEEE, and we look forward to working with you and building stronger partnerships.
Yes. And if coffee's not your cup of tea, join us anyway. We'll never ask what's in your cup.